What's going on, good people? Welcome back to another episode of Trading My Funded Account. Today is day number 43. It's December 11th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about today's important levels on the chart. So we have Friday's closing price located at this purple line below at 36,642. And something very important to also mention is the fact that the futures contracts have rolled over. So we went from YMZ, where the contracts expired in December, and now we're trading the March contracts. So that's what the H represents up here. So if you trade futures, make sure that you roll your contracts forward. So let's go ahead and talk about trade number one. So trade number one occurred down here in the pre-market, and it occurred inside of what was a range at the time. So it's hard to see what happened before. So let's go back and just look at it real quick. So in the pre-market, we were trading in this range right here between, what price is this? This lowermost price is 621, and then the previous day's closing price at 642. So we pretty much just played within that range for a good little amount of time. So that's the reason that I went long at one, just expecting for prices to come back and test the top of the range. So I went long at the lows of a range right here. But what I learned is that I need to remember that profits can disappear fast in a range. So I need to take my profits quickly. And I say that because if you look at where I got in at, I got in towards the lows of the range right here. The top of the range was 42. I had my take profit at 39. Prices came all the way back up to 38, and then they turned around. Now, I say that it's important to take profits quickly because I've seen a lot of occasions where profits come to the top of a zone or the bottom of a zone, and if you're expecting to take profits right there, you need to do so because they turn around quickly. It's not really too many occasions where they just gonna play around up there at the extremes of the range. It's a lot of orders up there that do need to be filled. So you need to make sure that if you do have profit targets up there, just be very aggressive with how you want to exit your positions and make sure that you lock that profit in, because this trade for me at one should have been profitable, but it came back to break even. Now, also one thing I would say is that when you're in a trade and you see that prices maybe came just 1 point away or maybe 2 points away from your target, and then they start to turn around, don't freeze up and just hope for the best. Just accept the fact that, okay, you're not going to get that highest price that you were looking for, but you can still get something. So I feel like on this trade, I'm not mad that it was break even, but I feel like along the way, I had chances to lock in some of that profit. So that's a lesson that I can take forward with me into the next session and use that the next time I come across a situation like this. So let's go ahead and move on to trade number two. So right here, we saw the market open at 930. We came back to the bottom of the zone, very interesting. And then we shot all the way up and established a new high somewhere around 725. Right, so once we established that high, we pulled back, created higher low A right here, and that is what led me to trade number two. So at two, I went long here at higher low A as prices came back to retest the higher low support level, and then I exited towards the top of the structure. Now, this wasn't my normal trade where I take it all the way up for 20 to 25 points. That's initially what I was looking for, but the reason I got out at the top of structure was because, for one, when you're trading the first higher low that comes after a very long extended move like this, that higher low just has a lower probability of being successful because the move has already ran too far. I call this a mature higher low because it's coming at the later stages of a trend that's already been running a little bit. So when you're dealing with those types of setups, they do have a higher chance of breaking down to the downside. But because the uptrend was so strong, I just felt like I should get in right here. You add in the fact that we were in the first 10 minutes of the market, so I know that things are going to be volatile. More than likely, we should see some type of buying coming in. So with that in mind, I did go long, but I had my backup plan ready. I said if prices were to break down below the support level after I got in, I was immediately going to get out. I would not let prices come back and actually hit my full stop loss, because I'm getting into a trade that's not necessarily an A+ setup. I would say it's like a B-. Good enough for me to take, but not good enough for me to just use an extreme amount of risk. So let me keep my my stop tight on a trade like this. And also, if I wasn't able to get out at the top of structure up here and I was still in the trade, another signal that would have indicated to me that it was time to get out was this lower high that got formed right here, right at this blue circle up top. And that lower high pretty much tells you that the same feeling that you had about this mature higher low being a little bit risky, that feeling is now confirmed because the market price action is telling you so. So that's just one lesson to remember when it comes to those mature higher lows. I would recommend to just not get in them at all, but if you do want to get in them, make sure that you keep your risk very tight and you're very proactive about when you want to get in or get out of the trade. So make sure you always remember that. That's very important. So then that brings us to trade number 3. So after this higher low up here from trade number 2, we see a strong sell-off. We broke past the higher low support level from higher low A, and then we moved all the way down to finally create the swing low right here towards higher low B, but just a little bit before it got formed. So then we pushed up, created higher low B, and this is pretty much where I started to look for trade 3. I saw that we were in a pretty strong down movement, had a higher low. So I said, okay, either the higher low acts as support and we see prices come back up and retest higher low A, or prices continue this down move and we see prices break back down below higher low B. So once they actually did break below higher low B, I shorted here as they broke past there, and then I came back, and then let's just read the notes. I shorted here as prices broke past higher low B and came back to retest it. And then I exited once I saw higher low D get formed. So that's something that you want to look out for whenever you're in a short trade. You know, if you see any type of higher low get formed while you are in a short, you want to make sure that you get out of that trade immediately. No matter what the circumstances might be, no matter how strong you think that downtrend is, if you see a higher low, that's the market giving you a signal that the characteristics are changing a little bit. So you don't want to still be in the market on the same side that you were before if things have shifted. That's very important. So I got out right here for about break even at trade number 3. So then we see prices push back up to retest higher low B and push right past it a little bit, but then they created this lower high at C, and that was really the confirmation that I needed to look for the short trade once prices broke back down below higher low D right here. So notice higher low D, once it gets broken back down through, it comes back and it closes right at the level of, well, really the lows of this candle from the higher low combination at D. So that's pretty much exactly what I look for when it comes to the short trade. So let's just read the notes really quick. I shorted here once I saw prices break past higher low D, and then the lower high at C gave me the confirmation that I was looking for. And then I took this back down to yesterday's closing price and took it a little bit further just to get a little bit extra on that trade right there. So those are the trades that I took today, and I just want to kind of go over some examples so we can compare these setups that I took based on the higher low being a failure setup, and look at some setups from the past that kind of relate to what we're seeing right now. So let's go back to December 6th from this year, and let's look at this higher low failure that occurred at A. So let's read this right here. The higher low failure at A occurred in the downtrend that was already down by 80 points from its peak. The lower highs at B and C made prices more likely to break past the support level of higher low A. So that's pretty much exactly what I look for when it comes to the failure of the higher low setup. So you see a higher low get formed in a pretty strong downtrend and prices move up. But when prices are coming back down to that support level, usually I would think long. But if the downtrend is strong, the first thing you want to think about is the short trade. You want to think about the break of the higher low and not the higher low acting as support. So the signs that give you confirmation that the higher low could get broken are, for one, the downtrend has to be strong leading up into that higher low that got formed. And then two, you want to see some type of lower high get formed as prices are coming back down to come back and hit that support level from whatever higher low got established. So we saw that lower high get established at B on this example. And then once they actually broke back down below it, they wicked down, but then they popped back above it for a quick second and made a second lower high right here at lower high C. And if lower high B wasn't enough confirmation, lower high C definitely gave you all of the confirmation you needed. So then once prices broke back down below it and came back up to retest on this one last candle, that's when you short it and you take it back down to whatever level of support below that you're aiming for. So that was an example from December 6th. And if we compare that to today, it was very similar. You know, we saw I'm not going to say the strongest downtrend, but it was a very impulsive down move, which means that the probabilities of a second down leg happening, they increase. It's not always guaranteed, but it's just more likely. So right here, we had a lower high that pushed prices down. We had another lower high at C that pushed prices down after a higher low got formed at D during an uptrend. So notice how once prices broke back down below, they came back up and actually established that second lower high that we were just talking about from the example from the 6th. I didn't mark this one up, but if we wanted to, we could definitely circle this one up too, and it would pretty much look almost exactly like what we saw on the 6th, where we had two lower highs that occurred before we finally broke past the higher low support level. So that's an example from December the 6th. And then I have two more. So let's talk about this one from November the 30th this year. So right here, we had a higher low failure occur right here in this junction at this section. So notice how we pushed down a little bit. We finally established a swing low, pushed up, came back, and made a higher low right here. Now, this was a higher low initially, but then on the very next candle, that higher low got invalidated when a lower high got established. So once that lower high got established, that pushed prices back down below the higher low support level. And then we came back to retest it. And then once you got the retest and you see prices start to move away, then that's when you want to start looking for the short trade and then take prices back down to whatever level of support below that you were aiming for. That was from November 30th. And this one was from November 28th. So these two higher low failures at A and at B both had lower highs, and they both led to strong waves of selling. So when you're looking for the higher low failure setup to occur, you want to make sure that the trend is already down. That's very important. You don't want to look for a higher low failure if the trend is up. You got to make sure that the overall movement was going down. That's the first criteria. Then you want to see a lower high get formed after the higher low already gets established, and then you want to see that lower high push prices back down below the higher low support level. And then once they come back to retest the higher low support level that they've broken through, it should act as resistance. And then that's when you want to take the short trade. So the same thing happened right here at B. We saw a higher low get formed, but then eventually a lower high got formed at B. And then that lower high pushed prices back down below the higher low support level. It came back to retest it right here. And then as prices moved away, that's when you look for the short trade and look to take it back to whatever support level you're looking for below. So that's pretty much the strategy that I was using today based on what I saw. And overall, I would say today was a pretty good day. I came into the market, I looked for the trades that I knew fit my trading plan, and that's all I was looking for. And I think that's very important because on trade D, I definitely wanted to get long or get short right here as prices were coming back down to push past this tweezer bottom that got established, because my mindset at the time was, well, if yesterday's closing price is right here, we see that the trend is already strong to the downside. More than likely, this candle should push prices all the way back down to yesterday's closing price. But if we talk about what happened on Friday, one of the biggest things that I learned from those losses on trades 1 through 4 was that when you see a strong move towards yesterday's closing price, you can't just get in because you feel like that's where it's going. You still have to wait for your setup to occur, and you have to understand that sometimes it's going to be a strong move up to yesterday or down to yesterday's closing price, and sometimes you just won't be able to participate because you didn't see your setup, and that's something you have to live with. But on those scenarios where you do see your setup, you get in and you take advantage of the opportunity that's there. So I think I made a good decision at D of not shorting from lower prices, expecting for the movement to come all the way back down to this level, but instead just waiting for the price that I wanted to come back and get hit. And I think that's very important. And that's pretty much the difference between the mindset that I had on Friday and the mindset that I had today. On Friday, I was chasing the market, just trying to chase profits, trying to chase what the market was doing instead of letting the market come to me and taking prices from the levels that I wanted. And I think that's really what I focus on today. All of these trades came from really good entries. Trade 1, I went long, and I went long as close as I possibly could to support. Trade 2, I went long as close as I possibly could to support. Trade 3, I went short as close as I possibly could towards resistance. And I did the same thing on trade 4, shorted as close as I possibly could to that resistance level. So I think I did a very good job today of following my rules. And I would say today was a picture perfect day. You know what? I take that back. I would say almost a picture perfect day if I would have been able to lock in those gains that I had on trade 1. So that's something that I need to work on. But I would say overall, I'm proud of my performance. Now, I need to just keep this mindset going. Today, well, not today, but this week will be big. CPI tomorrow, PPI on Wednesday, followed by the Fed meeting on Wednesday as well. And then the day after the Fed meeting is always volatile. So these next 3 to 4 days are going to be very, very important. So I need to make sure that everything I did today, I need to come back and do tomorrow. Because today, even though I did well, today is done. What I do tomorrow has nothing to do with what I do today, because tomorrow is a new day. So if I don't come out here tomorrow and do the exact same things, I might get results that I don't like. So I got to come back tomorrow and be disciplined, be focused only look to trade the trades that come from my trading plan and stick to that plan. The market will be moving fast tomorrow, which means that opportunity will be present. But the thing that caused me to take losses on Friday was the fact that I knew opportunity was going to be present, and I was just trying to chase the market instead of just waiting for my best setups. So I can't let the market, take control of my emotions and make me want to make emotional trades because I see that the market is moving and I feel like it's going here. I got to stay disciplined, and that's my main focus right now. So that's pretty much all I have for you guys today. I appreciate you guys for tuning in, and I hope you learned a lot about trading that higher low failure and making sure that you look for a lower high to act as confirmation to push prices back down below the higher low. And then once they come back to retest that level of support that was broken through, it should now act as resistance. And then that's where you want to look for your short trade. So I'll see you guys tomorrow on December 12th, 2023. So until then, have a good one, study hard, and take it easy.